From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 31st, 2016. Today we're going to be taking a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. It is important for us to recognize the fact that we do have, today's really our first significant news day on the calendar for this week. We have some news coming up just in about 20 minutes of the recording of this video. ADP non-farm information out of the US. You'll want to pay attention to that and watch that and see how the market reacts to that news before making any significant trade entries before the day today. But let's get started here with the AUDUSD. A couple of different things to point out here on the chart. First off, let's zoom out to the weekly. We've been studying this long-term trend line, the red trend line here, on the weekly time frame in the daily trade room for the past couple of weeks now. So it's important to remember that red trend line. We get down to the daily time frame. There it is, peaking up at the right-hand side of the chart. Why is that important? We'll take a look. Zoom it in. You can see that that's where the market found resistance and has started a downward slide here from the top, peaking out at the top of the green trend. The green trend line was moving up. The market was moving up, hit that long-term weekly trend line, and now has started a reversal pattern coming back down underneath the 75.20 level. So definitely some interesting aspects of that long-term trend line. And like I said, the green trend line, we were moving up, hit that trend line, started reversing. Remember, an uptrend has higher lows. That's what we recognize with the green trend line. A downtrend would start having lower highs and lower lows, and that's what we're starting to see now with the Australian dollar. The shorter red trend line, in fact, maybe I'll take that trend line and make it a different color just so it's different than anything on the chart. Let's make that one black. So the black trend line now representing the current downtrend pattern. We've been falling. We broke through the green trend line. We continue to make new lower lows. So that's interesting information here for the Australian dollar. We are settling down just on top of the 100 period simple moving average. So that's interesting. If we're going to continue to go lower, it will need to break through there. We'll need to get some significantly positive news for the U.S. over the next coming days, with non-farm payrolls coming up in the next few days as well. So definitely a few things to watch there with the Australian dollar. If we're going to trade the current trend and momentum, you know, last week we had the Fed Chair Yellen that made some comments that alluded to an interest rate change in the next coming months, which caused the market to go bullish on the U.S. dollar and this currency pair to go down on Friday, and it's been drifting in that direction ever since then. So if we're going to trade that current momentum and sentiment that the market has, which is the black trend line, then we would look for two things: selling rallies to resistance or break underneath support. Let's zoom it in one time here on the daily time frame and take a look at this area right around the yellow shaded area. Now it's hard to see, and I'll point this out on the 4-hour time frame, but back here we see some support along the yellow zone, some resistance along the yellow zone, support again, and resistance. So we've seen historical support resistance all along this yellow shaded area for the Australian dollar. That's 75.20 up to 0.7540. 20 to 40 is the yellow shaded area. And historically speaking, looking back here on the left, as long as it's underneath that yellow zone, there's a possibility, a good chance, a higher probability that it goes down to the orange shaded area. Just look back here. It goes down to the orange shaded area, which is into the 74, 60s, 40s. That's the orange shaded area. So staying underneath, again, that yellow shaded area, we look for the market to go down to the orange shaded area, and only if it gets back above the yellow zone do we look for it to go back up again. So that's what we're going to be working with for the day today. I've already taken a short. I put a short in at 75.20, so it's just now taking me in while we've been sitting here doing this recording. It's just now taking me in. So if you have an opportunity to get in close as possible to that yellow shaded area, 75.20, I think this is a short opportunity to go back down towards the orange shaded area. Let's take it down to the 4-hour time frame as promised. Zoom it out a little bit. You can see those little circles over there on the left. Again, we see support, we see congestion, resistance here. You know, if I take that blue circle, I could probably make it wider and put it here where all of these resistance are, where it was underneath the yellow shaded area. Support where the green circle is on the left, resistance where the red circle is on the left. So again, all of these areas show us that this yellow zone is a decision zone by the wider market. Buying and selling happening historically around this yellow shaded area. So that's where we are now. We see the market open and closed over the past several hours underneath that yellow zone, rallied back into it. We speak about that in the trade room quite often. Open and close under, rally back into it, and now we're looking for that next phase where it pushes back lower down towards the orange shaded area. We know what the risk is. The risk, that little red line right there, represents a potential stop loss. I currently have a 45 pip stop loss on the trade, so that's the risk. Selling 75.20, risking a 45 pip stop loss. We know that if it breaks back above the yellow zone, we probably don't want to stay in it because it's probably going where? Just look back in history, we can see it's going back to the pink zone, at least into the 75.80 level. So I'm not really willing to ride that kind of a negative trade out. I want to get out if the market doesn't do what I expect it to do, which is find resistance here at the yellow shaded area today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.